that cash is going to be affected. All right? We're mailing a check, so it's a check that came from us. The other thing is that installment. Installment is a periodic payment or a scheduled payment that you make on something that you have debt on. If you go and buy something and take out a loan, an installment payment just means that you're making regular payments on it. So we can gather from this one that we're writing out a check to pay somebody back that we owe money to. So the one account that we said was cash. The other thing is the account that shows how much money we owe is called accounts payable. So these are our two accounts. Accounts payable, coast to coast, and cash in bank. Let's start with accounts payable. Is it an asset? Is it a liability? Is it owner's equity? Accounts payable is a liability. Shows how much we owe. But in this case, is the liability going up or down? If you write a check to somebody that you owe money to, do you owe them more or less money? That's what you got to think about. In this case, accounts payable is going down because we're paying back somebody that we owe money to. So we find it again on the COIL side. So we know that if liabilities go up, we credit them. But because this liability is going down because we're paying them back, we got to do the opposite, and we would actually debit it to make that account balance go down, to show that we don't owe, or we're reducing the amount that we owe by $350. And cash in bank is pretty simple. It's cash, it's an asset, and yes, assets go up on the debit side, but again, in this case, the asset's going down, so we would have to do the opposite, and we would end up crediting cash in bank. Are we in balance? We have equal debits, we have equal credits, we're okay, we can move on to the last transaction. Alright, so here we go. On October 14th, Zip received and deposited a check for $200 from Green Company. This check is in full payment for the telephone that they sold on account to Green Company on October 11th. So we know now a couple things. One, we know that cash is going to be affected because we see the word check in the transaction. So that's one of our accounts. We also know that on account showed up, which means that either accounts receivable or accounts payable is going to be affected. So in this case, which one is it? Are we waiting? If we're getting a check, we're probably getting a check from somebody that owed us money. So accounts receivable would be affected. It's very rare that you get a check from somebody that you owe money to, right? So if you're receiving a check, it's accounts receivable that's being affected. So cash in bank, is it going up or down? Is it an asset? Is it a liability? Or is it owner's equity? We know it's an asset, and we know that it's on the debt side, and that all of these would increase on the debit side. So are we getting more cash? Absolutely, cash is going up. So we would write the $200 we received, we would record that on the debit side. Next we have accounts receivable. So they are paying us back the money that they owe us. So is accounts receivable an asset, a liability, or owner's equity? We already talked about it, it's an asset, but is accounts receivable going up or down? So if accounts receivable shows you how much your customers owe you, and they're giving you a check, do they owe you more money or less money after they gave you the check? They would owe you less money. They're paying you back the money that they owe you. So you would have to decrease accounts receivable. And we find again accounts receivable on the debit side. So we know that when it goes up, we write it on the debit side. But because we said accounts receivable, the asset is going down now, we would have to write it on the opposite side. And it would get credited. Okay. So a couple things you got to look at. Anytime you look at these accounts, you can see which account goes up and down. Remember, we eliminated plus signs and minus signs. We no longer use those. I can look at cash right now and tell you, I just got $200 more in cash, or I received $200 more in cash because it was written on the debit side. And that's the side that our assets increased. I could look at this asset and tell you accounts receivable just went down $200 because it was written on the credit side. That's the side that an asset would decrease on. It has nothing to do anymore with putting pluses or minuses. We know based on which side of the T account that it's written whether or not that account went up or down. Okay? So these are the basic transactions that you have to practice. If you can master these transactions, you'll be able to analyze and you'll be able to complete your assignments and your test work. Remember, use dead COIL as a method to kind of filter through which side the normal balances are. They go up or down. But you should be able to, using that tool, get through any of the transactions that you have to analyze. This completes Chapter 4, so you can review the first video in Chapter 4 and also this one. If you have any questions, feel free to come and see me or message me, and we'll get you learning debits and credits in no time.